welcome back to a brand new weekly market outlook brought to you by Funding Frontier and myself, Ryan Cruz, full-time trader, fully funded with multiple funded accounts. We'll be going over gold today, and we'll be checking out the weekly, the daily, 4 hour, 1 hour, half an hour and the 15-minute to see where we can get potential entries for a week, the overall weekly bias with potential things that can happen, and we'll also be looking over some of the news events that are happening during the week that may affect the gold USD pair. So without further ado, let's jump straight into it. So currently, last week we did say if we do respect the previous low of the previous wick, and as you can see here, if we do respect the previous, it was a bit of a tricky one last week because we had this candle with quite a small body with two big equal wicks, meaning it's quite unpredictable which way the market can go straight off the bat. However, because we were at this previous resistance that we tapped into, however, we did say if we do respect the previous low, as we did with this nice pullback on the wick, and then break the previous high, we have every opportunity to at least reach up to the previous resistance at 2747139. We didn't just do that, we carried on going bullish. We got a nice trade there, we had the wick fill, and then we have actually closed above this most recent resistance now. If I can mark that out quickly. So we have closed above this most recent resistance at 2750 pretty much. Now we do have this wick fill as well, which we have pretty much filled, and we were at one point during the week about 30 pips away from gold all-time new highs. So close. And what happens when we're at gold all-time new highs? We have done in the past, we see massive surges of volume. Now we are very bullish overall on gold. If you really zoom out on the weekly, be criminal to take some sells if you're like an overall swing trader, because we have been bullish on gold since I can remember overall in the market. But of course, not everyone's a swing trader, but we are heavily bullish on the overall market. But when we come down to the daily, the 4 hour, the hourly, the half an hour and the 15-minute, plenty of opportunities for scalps in there. Now, two possible scenarios I'll be looking at here. Because we're at all-time new highs, it does make gold quite tricky in terms of no previous data. Because we're at all-time new highs, there's no previous data, there's no support, there's no resistance, there's no clean candles to the left. So what you do have to do, which I will mention lots of times in this video, when looking for target prices coming into all-time new highs, use $5 increments and looking at the price. So each $5 you go up, look at them increments to use as target points. So if we do respect the previous low, again, on the very heavily bearish momentum we have at the moment, if we respect the previous low, come back up to flip bullish and break the previous wick high, I will expect a big surge of volume, a big volatility spike on the weekly, going very heavily bullish, coming into them all-time new highs. Now, what if we don't respect the previous low first and we do just drive up into all-time new highs? Pretty much straight away with no bottom wick. Now if we do that, again I will expect a bit of a surge of volume, a big liquidity grab to the upside. But as soon as we do that, I do believe if we do flip bearish after the big liquidity grab to the upside and reject, then we will have a bearish week and close back within our range of the weekly, presenting us with a weekly fake out, and then continue on bearish for maybe next month. Preferably myself, with gold being at all-time new highs, I do like trading into it. Of course there's added risk, but we do see lots of volume, lots of surges, and we can get some really nice moves. One of my best trades since starting Market Cruiser has been trading into gold all-time new highs, a lovely 100 pip move on the runners there. So I do like it if we get the good volume that we expect. Now coming down to the daily, so quite clearly we have our daily resistance at 2788718 at them gold all-time new highs. So a closure above that level, again, like I said previously, how do we use our target points? We have to use $5 increments for a target point. So if you do trade off the daily, then we'll be looking at first target points at 2,800, then 2,800 and I'm going to get it, 5. And you get the idea, 2,810, 2,815, and so on. Because we have no previous data to go off, use those $5 increments. However, if we don't close above and we don't carry on going bullish on the daily, where can we look to expect for price to continue bearish? Now we have created this minor support now, so we'll check out the lower time frames first, but again, a closure below this area, we'll see this bullish move, at least coming down to a previous resistance. So a closure below 2750.835 is what I'll be looking for. If we do that, we've got clean candles to the left hand side. Where will I expect price to initially come to? Yes, we have clean candles initially come down to 2703.310, but we have broken out of this previous heavy resistance that we did have. We banged on about it all week, all the last few weeks. The heavy resistance we rejected every time. This is the first time we've actually now closed above this area, so it's very significant. So if we do get the closure below the 2750 mark, I would expect price to at least come and retest the breakout of this resistance. We've got a nice 300 pips there, nice clean range. You see this where we've tapped into it plenty of times before, so that is a very strong area of interest, and I would expect price to come down to that area first. Below that though, if we do have the bearish week of the rejection, we then get a closure below 2703.310. If we carry on going bearish later in the week, I expect price to come down to 2663.253, and then closing back in this range. Probably looking at final targets at 2635.870. I wouldn't expect price to come down much further than that. But we do carry on. Then of course we have marking out these previous supports here as well. Lots of clean candles after each support, which makes a lot of sense. So there's the daily bias all drawn out. About the 4 hour, do we have more of a cleaner picture? We do. We're really nice now. So again, the same concept applies at the close. We do have our most recent resistance at 2783.197. A closure above there, of course, we have the clean candles coming up to our all-time new highs. Like we did on the daily, once we get above that area, we use the $5 increments as TPs. Now, coming in zooming in closer on the 4 hour, we have had this most recent support here at 2772.244. Now, yes, we have had this closure, a tiny candle closure below with no bottom wick. I'm not going to consider that as a breakout. First of all, it's a tiny body. Second of all, we've got no bottom wick. So I would like to see at least a new support form first. For example, in this area. Then we have a more solid range to work with. And if we get a closure below, say 2770.163, after we have to see the bullish support form first. As so. Let's say this is our bullish candle. Then we've got our new range here, right? Then a candle closure below. Clean candles to the left hand side. I would expect initial targets to take out this no bottom wick. Secondary targets to take out this no bottom wick. Then more clean candles coming down to 2741.694.92. And then final targets down towards 2728.86 and so on. We've marked out these daily zones as well, which match up really nicely. Marking out some more TPs there for you there. So really nice price action, really nice structure. Let's come down to the hourly and the half an hour, because the hourly is lovely. The half an hour also matches up really nicely. And then we'll go down to the 15-minute where we've got some really nice price action for the clean candles again. This is a really nice picture. So coming right down to 15-minute, my favourite time frame to execute my trades on after doing all the multi-time frame analysis. Now, tightening this up again, we did have our most recent support at 2770.885, right? Or 2770.922. Now we have had ever so slightly, again, just like we just looked at, a slight closure below, right? So with this, I would expect price to continue on bearish, but it's the last 15-minute candle of the Friday, the week. Then we've got the market opening tonight, Sunday. So again, just like we have just mentioned on the 4 hour, I do want to see at least a bullish closure first, creating a new range here, for example, and then just get a nice clean closure after the bullish candle at 2770 to 712. Then it just creates that nice range. Then if we do get the closure below that level, so for example, let's draw that out nicely. There we are. Perfect. So a closure below there, then we look left. What do we have? Clean candles. If you're going to look to take these shorts or a trade, you have to have clean candles to the left. Where will our initial target point be? It will be at 2768.500 area where we have this minor support. So it's a very nice area point of interest. I've lost my mouse. There we are. So yeah, a nice 20 pip range there, which is really nice scalp. After that, again, with volume, price coming down to, we've already marked this out with the no bottom wick that I would like to get taken out at 2672, 372. And gold, this is gold dust. This clean candle is gold dust. Another 60 pips below the area. TP2 going there. TP3 at the end of these clean candles to come down to this minor support at 2758717. And then, as you can guess, we do have more clean candles a bit later in the week. And then we come into a bit of a choppy range, which I don't like. So looking at this area here, this is going to be a no trade range. I wouldn't advise trading into this. If you do get that candle closure below 25611617 later on in the week, don't trade into this. If you get a closure below, you think, great, we've got a closure below, we're going to continue on bearish. Yes, with volume we might, but it's so risky. You want to see price drive through this at least first. Just ignore it though, and wait for that to get cleared out. So after that, you want to see price close below 2752158. Then you can trade into these clean candles, which is very nice. Just being aware of this no bottom wick if you want to be extra safe, because I do see price often react to these no bottom wicks. So you want to be extra safe. Closure below this big rejection wick, closure below the no bottom wick at 2751. Then you've got these clean candles. Just going to measure out this range. If the range is below 20 pips, you don't really want to be trading into it. So 46 pips, so really nice. So yeah, final target's down at 2746445. So that's really nice for sell side, right? What about for buy side? Because you always got to have two biases where you get candle closures, right? Now, looking at this most recent support, how much clean candle we got? 30 pips, beautiful. So, marking out our most recent resistance, perfect, at 2771774, a closure above that area. Look at the clean candles we've got. My initial targets would be to take out this previous resistance at the end of the clean candles at 2774778. Then gets a bit more choppy, but my TP2 would be at the top of this range. Bit more tricky because it gets a bit more choppy, but we do have a slight clean candle there. So just for the TP2, if you took this trade here, if we get that closure. But after that, I want to see a solid closure above 2775767, because then look, gold dust. Beautiful clean candles running all the way up to 2785148. Of course, now if you do get that closure above, look how big the traffic is. Pretty much 100 pips, right? 94 pips. Now, just because our clean candles ends at 2785148 does not mean that you have to just hold the trade until then. You can catch 15-20 pips. That is your slice for the day. Take a slice out of the market, and that is absolutely beautiful as it is. Come back next day and take another trade. You don't have to have the whole of this. You don't have to catch the whole move. You can catch a slice of the move. That will make you a consistently profitable trader, just taking a slice every time, right? What you can do is, secure your 15, 20, 30 pips. Then put your stops to break even, and then secure some partials at that point, and then let your runners run to the full clean candles. That's why runners are so good, catching those extra pips. You've already made your risk-free trade, so anything after that is like a bonus, right? And then after that, again, coming up after the candles to the left hand side, again we're going to be trading into the all-time new highs, like we said, using $5 increments to continue up into the all-time new highs, which is going to be absolutely beautiful if we do get up there. But either way, we have got some really nice price action for the week. If you hold fire, I'm just going to come over to Forex Factory, and I'm going to check out the news for the week for you. So on Monday, we've got no news, which is really nice. Tuesday, we have got CB Consumer Confluence at 3 p.m. GMT. Now, what to do with news when you've got a red folder flag? Do not trade news. It's going to be super volatile, high volume, red folder flag. Get it out of your head. Stop gambling. Don't trade the news, right? 3 p.m. GMT, the news event is, right? So at 2:30 GMT, half an hour before the event, I'll stop trading. During the event, trading, and then 15 minutes to half an hour after the event, when price is settled and the news is settled, then I can go back into the market and start looking at the charts. But if you know it's going to be high volume and high volatility during high impact news, you've got to get yourself out of that mindset, because some people will just be like, yep, high volume, I can make quick cash, quick dollar. You can also lose your whole portfolio like that. What's the point in taking the risk? If you want to be a good, disciplined, profitable, consistent trader, don't trade the news. You see all these over social media, the gurus and the fake traders, they're all like, you made 100 grand, 100k on this news event on CPI. No, they didn't, for a start. It's gambling. It's just not worth it. And if they have done it, it's because they've got so much money already, they don't care. But if you want to be a good, disciplined, consistent, profitable trader, don't trade it. If they're telling you to trade it, they're not a good mentor. Okay, anyway, rant over. Wednesday, we have quite a bit of news here. Just checking out the USD news. Whoa. Okay, Wednesday. No news during the day, but then guess what we do have at night? Well, 7 p.m. night time for me is FOMC. Going to be huge volume and volatility around that time. You might see lots of periods of consolidation during the day because we are pricing in for FOMC. So yeah, avoid that. Thursday, we have advanced GDP and we have unemployment claims at 1:30 GMT. And then coming over to Friday, we have CPI and employment cost index. So quite a lot of news during the week, so just avoid those times. Not the whole day, I mean, just avoid around those times. But that is it for me, guys. Hope you enjoyed the weekly market outlook. Make to trade safe, don't risk more than 2%. If you did enjoy this video, please leave a like, subscribe to the channel. Don't forget to follow Funding Frontier on Instagram at Funding Frontier and myself at Ryan Cruz FX. See you on the next one.